So welcome everyone to the concluding panel of what has been so far a wonderful day. We are concluding with another very powerful group of Hong Kong's maritime leadership, sharing with us their insight on navigating through industry transformation. These are companies that are based in Hong Kong, operating in the global markets, and we look forward to having their insight on the major industry topics. I'd like to thank Vikrant, Bing, William, and Mats, and of course, thank you very much to Norbert for being the expert moderator. So I will turn it over to Norbert and welcome you all and thank you for being with us.
Well, thank you, Nicholas, for the nice introduction. And good evening to all of you, and a very warm welcome to the panel on navigating through industry transformation. I really feel honored and happy to moderate this high-level panel. The marine industry is in the early stages of transition from more than a century-long reliance on fossil-based fuels. Prodded by societal expectations, regulators continue to keep up the pressure on the marine industry with increasingly strict emission guidelines. At the same time, digitalization and automation are about to revolutionize the maritime logistics chain, with new players coming in, challenging the way we have worked for several decades. The black swan event of COVID-19 has turbocharged this process even more. But the shipping industry has shown that it can rise to this challenge, and virtual forums like this here today are a testimony to this. Despite the many difficulties we all face in these unprecedented times, there are also a lot of opportunities. And I'm very happy to have top executives from various companies in my panel here today. So let me introduce the panelists to you. We have with us Bing Cheng. He is the president and CEO of Atlas Corporation and C-SPAN. Then we have Vikrant Bhatia. He is CEO of KC Maritime Hong Kong. Then we have with us here Mats Berglund. He is the CEO and Executive Director of Pacific Basin Shipping Limited. And last but not least, William Fairclough. He is Managing Director of Wah Kwong Maritime Transport Holdings. So gentlemen, I think we simply start into our panel discussion. And firstly, I have a question to all of you. How far can the wider ecosystem and supply chain of shipping connect with each other once the various players have progressed on their digital journeys? What would be the perfect scenario in your view? Maybe Bing, you'd like to start with this question?
Yeah, sure. You know, with the change that is happening, I think that definitely has impact to the supply chain. I think first of all, we see the political impact, and I think that you see a lot of media and countries that has the different views on this. But for us, we see the impact is more on the trade side, specifically on the container shipping sector. We see the trading pattern has changed. Before, maybe it's a country to country, but now because of these, I would say that the so-called trade dispute, there's a lot of, I think, a change in terms of the pattern. This is really because we see that at the end of the day, the global trade is still there because, to change the supply chain, it takes the time and also takes a lot of capital. It's not something that you can change overnight. So therefore, with these discussions that's ongoing amongst the politicians, I think the impact is we see the mostly is in actually the increase of activities in particularly in the trade pattern. For example, before you might see the goods has been shipped from China directly to the U.S. Now you will see the goods has been, first of all, shipped from China to another country, for example, in Southeast country, and then from there to the United States through the reassembling or packaging. So overall, I think that this is something that's it's gonna be there for a long time because the political reasons. But on the other hand, if we're looking at from the last year's the trade war and also including this year, we have the Brexit, and I think from our discussions with the liners, I think they see as actually is also part of the contributions to the current increase in demand because of with the uncertainty of the Brexit, as a lot of the buyers and sellers is trying to rush these transport within the time. So overall, I would think that from an industry standpoint, there's an impact, but the impact is increased activities.
Right, very good. Thank you so much for your great insights. And Mats, what is your view on that?
Well, on the supply chain, I think for the dry bulk market, it has shown extremely good adaptability, so to speak. As you know, dry bulk is primarily a tramp trade. So I think the industry has an enormous ability to adapt to whether it's new tariffs or new regulations. We really adapt well and quickly. One country is shut off as a supplier for various reasons. We move it from somewhere else. I think we also have to highlight and thank our crews on board all the ships for really being loyal and staying on board the ships in spite of not being able to be relieved, right? I know that's been discussed on the panel before, but is worth mentioning again. You asked for what's the perfect scenario? Well, the perfect scenario is that we get less trade wars and more free trade going forward.
Right. Thank you, Mats, for this very good answer. And well, Riklan, nice to have you also in our panel. We met often in Hong Kong already. So what is your view? Maybe there are some, I think.
Mute.
He's maybe, Riklan, I think you have to unmute. Otherwise, maybe I think we first start and go ahead with the.
Sorry, can you hear me now?
Now it's very good. Perfect.
All right. Okay. Yeah. So sorry, just some technology issues. Yeah. Thank you. Yeah. So I would echo really what Bing and Mats had to say. The supply chains, the dry bulk industry has been surprisingly resilient through the whole sort of COVID cycle that we've experienced so far, and it's probably one demonstration, that despite pandemics, despite wars, despite trade issues, that demand for goods is still going to be there, and we need to, as Matt said, adapt to meet that demand for goods. Certainly at a macro level, I think we'll see more regionalization in trade, growth in that area. Matt spoke about the crew. That's, being an ex-seafarer myself, it's really heartbreaking to see some of these people having to, be away for so many months when away from their families, away from who are probably, in countries which are facing the big, a big brunt of COVID or a big impact from COVID. So, I think most of the responsible owners have been doing what they can, given the regulations, given the limitations, in trying to carry out successful crew changes. I'll leave the floor open for other people to speak for now, but that's what I have to say.
Well, thank you so much, Vikram. So, William, what is your view on this topic?
Thank you, Norbert. I think I will focus more on the digitalization part, which is, I think, the overwhelming, sort of overriding theme of this panel, rather than going back onto the market discussions, which I think have been done elsewhere. And I think from a digitalization perspective, obviously, the pandemic has fast forwarded a lot of our use of technology, our application, and the way that we think of technology. I think one of the exceptions, and I think somewhere where maybe I'm not speaking in the same sort of sense as the trend seems to suggest, is that the actual vessels themselves, I think, are a little bit still left behind on this part of the journey, because we've all seen that as the pandemic has made traveling impossible, the connectivity we have is really astounding, and the ability to do so many of the jobs we thought we may not be able to do remotely, we can basically do them all. And that is because we all have, connectivity that we've really got used to, the broadband connectivity that supports all of this information flow from A to B. I think ships themselves, and I've been looking at this a little bit more recently for various different reasons, because there's the environmental piece, which I think we might come on to later, but this is actually quite a good platform to stimulate the collection and processing of data, because we have so many challenges on that front. But if you just take it back to the actual vessels themselves, effectively the connectivity of most vessels at sea is similar to the connectivity we had on land in 2003, 2004 in Hong Kong, which in other words is just a little bit better than a sort of dial-up internet connection. And as we all know, the proliferation of applications have completely changed our lives over the last decade. And I think the iPhone is just over 10 years old, maybe 12 years old. That really came when we had much better access to stable broadband. And that is still denied most ships. The technology is frankly not there. You have maybe 2 megabytes a second, and it's not necessarily that stable. So to my mind, there is a huge technology revolution that will take place on the ship, but it won't happen until we have sort of blanket fast connectivity, which is available everywhere in the middle of nowhere. And I think that will stimulate the digital sort of revolution for ships themselves. I think at the moment, most of the sort of digital revolution, if you like, is constrained to, what we do, which doesn't involve, constant supply of information to and from the ship.
Very good, William. And I think we have for sure some time also for more individual questions to you. And Bing, maybe I'd like to start with you with a question. So C-SPAN is dedicated on long-term relations with your customers, and you are focused on container vessels. So container transport over the last 20 years has almost doubled its volume. Looking to the recent geopolitical environment, with negative impact from the trade war between US and China, and in what direction do you see the container trade will be heading, and how would decarbonization impact your container fleet?
Thanks, Norbert. For container sector, actually, we see a very strong development, and particularly over the past 6 months, as the panelists just talked about in terms of other sectors within the shipping, including dry bulk and others. But for container shipping, is actually quite different in the sense today, if we're looking at the entire market, we have really no more than 10 liners. And this is a significant development over the past 3-4 years with the liners consolidation. 3-4 years ago, you have over 30 companies, liner companies. And today you only really have 10. Out of these 10, about 8 accounts for 85% of the market. So this is a major development in this sector. On top of that, you also have the alliances, similar to that of airlines among these liner companies. So from a demand side today, I think the liner is very well, I would say, disciplined and focused on delivering the quality of service to their end customer. At the same time, we're talking about from the demand side, actually, even with the COVID, the demand actually for this year, according to the industry, analysts forecast for this year, initially they forecasted the volume is going to be down about 12%. And now they're saying that, this year the volume will still be roughly about the same, maybe 2% down than last year. So the demand is quite, strong. And this demand is really, we're talking about it earlier in terms of the change of pattern, which is driven by this supply chain and driven by the trade tension. But that actually contribute to part of this strong demand. The other part of the demand is what we have seen, but by talking to the liner customers, is that really the cross-border e-commerce. A cross-border e-commerce basically saying that you and I these days, we're going to order from Amazon, for example. But at the same time, when we order things, for example, from Hong Kong, the goods actually shipped from Amazon, United States, but that is still manufactured in China. So therefore, you see this type of increased activity on top of the traditional, for example, Walmart, that type of merchandising. So that is the part of the consumer behavior change that increased the volume. And then from the supply standpoint today, the overall container shipping industry, the order book is still at the historically low level. Right now, it's still at approximately 12 to 15% of the overall industry capacity. And as you know, usually the vessels takes about 2 to 3 years to build. So every year you have about, the new delivery in terms of the tonnage about the overall market is about, 3 to 4%. So the supply side is very much, still very much in discipline. On the same time, the demand side is still very strong. So therefore, we see currently, and particularly currently, it's actually a lot demand, but at the same time, the supply is very limited, which is reflected into this historically high charter rates across the sectors, and also it's a shortage of vessels. So we see this is going to continue for some time because the fundamental of the market has changed, and also with the demand supply balances temporarily right now, it's a shortage of supply. I would think that the market is going to have a very, I would say, rather strong 2021.
Thank you so much, Bing. And I think it's really amazing to see what is right now happening in the container business, especially this year. You said there was prediction it will go down, but it stays stable. And now I think all the liners are reporting really good results for 2020 so far. Well, thank you so much, Bing. And then Mats, maybe I'd like to come back to you with one question. Pacific Basin is one of the forerunners in the shipping industry, and moving towards digitalization will help for sure to improve efficiency and timely decisions. Such changes will involve a lot of challenges and resistance. And as an early adopter, how do you resolve these issues, and how do you see technology will impact the future of shipping?
Thank you, Norbert. We actually don't see that much resistance, but a lot of people are quite, excited about it. So, and the areas where we see digitalization having an impact, maybe first, I'd like to highlight that we're hoping it and believing it will lead to safety improvements. As you know, Norbert, maybe we can use data and technology to prevent incidents and see the warning signals maybe of both machinery and people before an accident happens, which would be a great achievement, and we think that will happen. The second thing we believe will happen and is happening is a bit of gradual automation, both on board and in the office, maybe quicker in the office. I'm talking about RPA for some invoice handling and so on. We will get some efficiencies out of it. Maybe a little bit slower on board, partly for the reasons William mentioned. But then the third kind of aspect of digitalization, I think, is commercially, where more data is already used for market intelligence purposes. And what I'm talking about is AIS information for vessel positions, cargo data, commodity intelligence, etc. And this is leading to, we believe, less secrets in the market, more transparency. And maybe that will make it harder for an asset light only company to squeeze out the margin between the owner and the shipper. So those are three aspects of digitalization that we see is already coming and already happening.
Right, very good, Mats. I think very good insights from your side. And well, I think then I'd like to continue with Vikrant. Vikrant, you are one of the insiders also in the bulk business for sure, and tank. And I guess you're also aware that recently Anglo-American, as a charterer, contracted with Yuming for several LNG-fueled bulk carriers here in China. And on the other hand, also BHP contracted with their EPS from Singapore, again for LNG-fueled ships. Also, some ultra-large container ships ordered recently are equipped with gas as fuel. So from your perspective, what you see, this is the dawn of a new trend to move away from diesel fuel?
Thank you for the question, Norbert. It's timely. A couple of days ago, Clarkson actually released some data on the tracking of technology in fuel transition, and it shows that roughly, say, 200 new buildings on order of all types of vessels other than pure LNG carriers are dual fitted for LNG, and this will add to the 200 similar types of vessels that are already operating on the water. Now, if you take all these 500 odd ships, just under 500 or just over 500 odd ships, it's only 3.5% of the global fleet. So the numbers are still very small to make a significant impact. Now, if you look at the new building stage, typically, for medium-sized ships and large ships, the fitting of a dual fuel engine is roughly, say, $7 million and north of that. Now, those numbers are not supported commercially in the market. So it comes as no surprise. Dr. Tristan Smith, who's a professor at UCL, he does a lot of work on the decarbonization of ships, is closely involved with the GMF, and I get to talk to him occasionally. He did a study which demonstrated that actually the LNG ships or dual fitted LNG ships only are being implemented really on the time chartered fleet rather than the spot trades. So it lends itself to vessels that are on point-to-point trades, like the large Newcastle Maxes in which are doing Australia, China, or VLCCs or tankers or ferries or cruise ships. Now, look at what's happening in industry. Maersk has been very vocal about its rejection of LNG even as a transitionary fuel, and I think some of their thoughts come from the ICCT, which is a well-respected body, an NGO led by an ex-EPA director, which has clearly demonstrated in a working paper and studies that from wake to well over, say, a 20-year period, and which is a typical life of an LNG of a vessel, that the emissions on an LNG ship are actually more than that when you compare them with a fuel oil ship. So, then you get your beg the question is that why are people doing this? Again, LNG, studies have shown that the dual fuel LNG engines only start to make commercial sense when there's a price spread between, say, the Henry Hub and fuel oil prices. That price spread has all but disappeared. In fact, it's more, maybe even more expensive to run on LNG today, because just to break even, you need oil at roughly $62 a barrel, and we all know that the price of oil today is more like 45, and even if you look at the forward curve, it's still in below $50. So it begs the question, is that why are people putting these LNG ships? I think that it's a combination of large organizations wanting to tout or push forward their green agenda without actually looking at the whole LNG life cycle of producing the LNG. Shale is a big producer of LNG, and it's notorious for its methane slip. But at the same time, you ask the question is, will LNG be a transitionary fuel? Even though I'm not in favor of it, I admit that it will be a transitionary fuel. Why? Because there's no credible option at the moment to, LNG does have a 25% reduction in CO2, while it may have more methane emissions. There's no credible option to that. And you can certainly see that because, you're seeing, more LNG bunkering, more LNG, more ports able to handle more LNG. But again, I'll end by saying, just like scrubbers, the only thing green about using LNG is the color of the money they expect to make. Thank you.
All right, thank you, Vikrant, for your very interesting insights. And I mean, this is a very hot topic about LNG as fuel. Is it a permanent solution or more a transitional fuel? What we as DNVGL say. So, and I think we can talk for several hours and will not maybe find even a fully satisfying answer to that. Anyway, thank you, Vikrant, for this very interesting insights. So, William, then I'd like to come to you. You are the managing director of Wakbong, and the Internet of Things and AI become more and more mature technology and is available in the market. The amount of data that generated with sensor technology provide overwhelming amount of operational data. There are some digital tools on the ship management available in the market, and they have various features. In your opinion, how would you like to see these tools should be further developed?
Thank you, Norbert. The Internet of Things. It's something we hear a lot about. I keep hearing about refrigerators that will order milk when you're running low. I've yet to meet anyone who's actually got one. I'm told they're coming, but there's no doubt that the connectivity between industrial equipment is quite a long way ahead. We all know about Teslas that can sort of download software updates that mean they can do things tomorrow that they couldn't do yesterday. And I do think eventually we're going to get to that sort of place with vessels. And I talked a little bit earlier about what the sort of bottleneck is there. But what I would like to see all this data used for and the proliferation of technology is actually very much a follow-on for what Vikrant has just been talking about. Is I think we need to be measuring especially emissions data, but so much of the targets that we're going to set ourselves over the next decade have to be driven by much better information as to how we measure our real emissions. And as Vikrant very eloquently just explained, this debate about LNG as a fuel, there should, we need to establish one way or the other. And so everybody can acknowledge that it's either a good thing or a bad thing, a step forward or a step back. And that is something that is now eminently possible if we trace the full supply chain and we use the technology available to us to track each stage of the supply chain, from the spade going into the mine to dig up the iron ore in Brazil, through on the ship to the steel mill, into the factory, onto one of Bing's liner vessels, straight into Amazon, to the shops where somebody's going to pick up a washing machine, let's say, for example. Now, that whole supply chain needs to be tracked. We need to understand, consumers need to understand what are the implications of them buying that piece of equipment. And when I talk about the implications, I don't mean whether or not it's going to wash their clothes properly. I mean, what are the implications on the environment? What is the carbon footprint of that supply chain? And in order for us to all get to that stage, we need to work right from the beginning all the way through. And technology is what enables us to do that. In fact, in a way that technology is now available that has never been available to us before to make this eminently possible. We talk about blockchain. I'm not an expert in terms of, I'm certainly no blockchain architect, but I know that it is a ledger that is in effect a digital but indelible ledger that can actually help you track each stage of the supply chain. And we need to measure, as an industry, we should have probably been doing it a lot better than we are, but we've got the wake-up call. I think there's no doubt that our minds are all focused now. We have 10 years, we have 2030, and we have some targets to meet as an industry. And we need to work up and down the supply chain. And I think, you know, you have Bing, who's much closer to the consumer. The liner companies are dealing with a lot of the big apparel makers and a lot of the consumer-facing companies that actually get a lot of pressure from consumers now, and they're starting to get a lot of pressure from consumers for that sort of information. At our end of the market, where we're shipping raw materials, it's still, you know, we're quite sheltered from that. We're very much business to business. But what we think that we all need to be doing is reaching up the supply chain, and they reach down, and to make that information really evident to everybody who is at the end of the that chain, which is the consumers, all of us, you know, when we go and buy something. And I think if shipping could do something in the next 2 or 3 years, because as Vicky said, you know, are we going to come up with a low carbon, zero carbon form of propulsion in the next 10 years, 15 years, even 20 years? It's debatable. I mean, you could sit, as you said, talk about this for hours. And the reality is, no, there's no obvious answer. But what we can all do is make sure that we use technology to measure every stage of the impact we're having as an industry. And by the way, if we chose to do something about that, for example, if we chose to offset the entire carbon emissions of the supply chain, the cost to each individual piece of consumer, you know, stuff that was being bought would be tiny. It would be hardly noticeable. But forget about that. Let's start by really using the technology, get a good picture of what the impact is we're having, and then we can address the best way to go forward.
Well, thank you so much, William. Great insights from your side, and I think we have still some minutes left now. I have to watch on my screen whether there are some questions from the audience who are, I think, joining us globally. I think there are several hundred people joining us right now, and to me it looks like there are right now maybe no questions from the audience. I think anyway, the time is flying, and time is also more or less up. And I'd like to thank all of you for your great insight and the really fruitful discussion tonight here. And it seems that we all agree that shipping is in the midst of a transformation process, which is offering more opportunities than posing really burdens to us. And when we work together with an open mind and embrace the challenges, we can turn them into opportunities. By leveraging scale, innovation, cooperation, and transparency, we now have the chance to set in motion, I think, a maritime renaissance. And my suggestion would just, let's do it. And well, I think then this brings us to the end, and I really look forward to seeing you personally in Hong Kong, hopefully sooner than later. And then thank you again, and stay safe and sound. Thank you so much.
Thank you to everybody. It's been a great panel and a great way to close our forum today. Overall, it's been a great day, and I hope that we were able to portray all the strengths and advantages of Hong Kong to a global audience. So thank you to everybody for your support and participation.
Thank you.
Thank you.
Thank you, Norbert. Thank you, Nicholas.